Hello, ladies and gentlemen. Welcome to Triple N Media. I am Nik Nikam. In this presentation, we are going to look at our presumed treasury sales by China and Japan rattling the tariff plans on the stock markets. Let's look at some real facts. There are stories all over the internet, YouTube, social media, that Chinese are dumping the US treasuries, and maybe other countries are also dumping US treasuries, which is uprooting the tariff plans, making the dollar weaker, and interest rates skyrocket. Let's look at real facts. But before we go into looking at real facts, I want to tell you I'm not a financial advisor. I am just a senior investor. I am more interested in trying to see what is affecting my stocks, bonds, and investments. So, whatever research I do is for my own personal purpose, and I'm sharing this with you. Hopefully, you get a better understanding of what is happening based upon my research. I am not a licensed financial consultant, so whatever I'm saying you is what I see as an individual senior investor looking at the data coming from various different sources. Let's see if there's a correlation between treasury sales as it is being portrayed in the media versus what's happening in the market as such. Before the imposition of tariffs, China held 1.3 trillion US dollars in treasuries between 2012 and 2016. So it's very important to keep in mind they held $1.3 trillion in US treasuries between 2012 and 2016. However, between 16 and 22, China has been progressively unloading their US treasury reserves. As a result, the China's treasuries amounted to $759 billion in April 2025. So if you look at the actual breakdown of what was China's treasury accumulation before the tariffs went into effect. So if you look at here, in February, China held $775 billion worth of US treasuries. In April, they were down to 759. So there's a drop of maybe $15 billion directly after the implementation of this stiff tariffs against Chinese products, going all the way up to 145%. But if you look at the graph, the number of US Treasury bonds sold by China is not anything of significance compared to what it did in the years between 2012 and 2016, where it dumped from 1.3 to $800 billion. So that's the story. As far as Japan is concerned, it's a different story. We'll come back to that in a minute. So, looking at the real facts, I don't see a big number here based on the data that China was dumping a lot of treasuries after the announcement of the tariffs. But there are a lot of other people could be dumping the treasuries for other reasons, but not by China. Okay, the decline in China's holdings reflect a broader trend, reducing exposure to the US debt amidst ongoing trade tensions and financial conflicts that has been brewing over the last several years, not just right now. Right now it has intensified because of the steep tariffs, but it's been going on for many, many years. And as you can see, because of the turmoil in the market itself, the interest rates, which were all the way down to 3.9, have jumped to 4.5% as of April 13, 2025. So it's an important point to keep in mind. Definitely there has been an increase because that means more people are selling. When more people are trying to sell these treasuries, there is more supply and less buyers, which will make the prices go down. As a result, the interest rates go up. The treasury interest rates go up, when the bond value goes down. And when the bond value goes up, the interest rates come down. So they sort of work in reverse. So let's move on to the next point, Japan. Was Japan selling the American treasuries, which Japan, as you can see here, held $1.1 trillion worth of United States treasuries, and in April is the same amount they are holding after the announcement of the tariffs. Japan is ready to come to negotiations with the American counterparts early part of next week. So Japan is willing to work with the United States in terms of having a meaningful, bilaterally acceptable trade relationships with the United States. So Japan has maintained a steady position of the US treasuries. And in fact, Japan policymakers say that they have no intention to sell the US treasuries at this time. So let's take a look at a broader look and see what will happen if China were to significantly dump American treasury bonds. It would increase the US interest rates. As I said, there's more treasuries available in the market, more supply, the demand goes down, so the bond value goes down, whereas the interest rates will go up. And when you look at the interest rate chart, it has already gone up, and some economists are predicting the interest may go up to 5%. This is all the information I'm getting by just watching CNBC news and following up on all the information, which concerns me because I invest a lot of my money in bonds. So I'm concerned about how bonds are going to be affected with all this international tensions going on as far as the tariffs are concerned. We were talking about what if China or Japan or whoever has a large number of US treasuries, what if they start dumping the US treasuries all of a sudden? That will increase the interest rates. That's number one. So it will make it more expensive for the United States to borrow the money. That means the interest payment on the United States, $36.6 trillion, will go up. So there is an increase in the interest payment through the US Treasury. It also weakens the US dollar. Decreased demand for the US debt could lead to a weaker dollar. Weaker dollar would also change international trades as the price of goods will go up when the dollar price goes down. It introduces financial instability, global financial instability. A large-scale sell-off could trigger broader instability in the global financial markets, affecting investments and economic confidence. So these are all some of the effects of changes in the US treasuries, especially held outside the United States. If there is a significant shift in the amount of treasuries held by other foreign investors. What happens to the stock market if a lot of people start selling the US Treasury bonds? We talked about the interest rates. Then because of the higher interest rates, a lot of people are going to go into the bonds. If you get a 5% interest rate, a lot of people may be interested in just putting their money in the safest investment they can think of, especially when the stock prices are going down, and it creates a spiral. As the interest rates go up, more people take money out of the stocks, and that leads to a drop in the stock market prices. And this will also lead to inflation. When the bonds prices drop, when the interest rates go up, borrowing goes up, the cost of goods go up, and the production costs go up. That leads to inflation. And so this is like a spiraling effect with the changes in the amount of treasury bonds that are being sold in the market. If there's a sudden shift, it's going to have a domino effect on the dollar value. It's going to have a domino effect on the interest rates, inflation, stocks, and bonds. I hope this has been useful to you because this kind of research I wanted to do for my own self so that I understand better what is happening and what I need to do to stay afloat. As I said, I'm not a financial consultant, I'm not a financial expert, I'm just a media person and an individual senior investor. I'm just looking at things from my perspective and sharing what I have learned in the process. Thank you so much. We were talking about our treasury sales by China and Japan rattling the tariff plans on the stock market. Now you know what the real facts are. I will see you in the next presentation. Thank you so much. Oh, please do subscribe to our YouTube channel. I'll see you in the next presentation. Thank you.